12 common insurance mistakes that well-connected people always avoid. Not having the proper coverage is a mistake millions of Americans make every year, and they only find out about the blunder when misfortune strikes and their policy doesn't apply to the particular risk event they're facing. Learn more about the common insurance mistakes that well-connected folks always avoid. Welcome back to the Sweetie Kiwi Show, the world's largest infotainment show. How you doing today? I hope you're doing fantastic. I'm doing marvelous. And if you are doing as marvelous as I am, coffee or tea or vodka, and let's roll. Today, before I get into the nitty-gritty of insurance mistakes, I want to give a shout out to Bella Mitchell. She is in Kaneohe, that's Hawaii, Leia Chin in Pearl City, Hawaii, and Kathleen Price in Kapolei, Hawaii. My pronunciation is not really that good, so please forgive me. So we have Bella, Leah, and Kathleen all the way from Hawaii. Thank you so much. We really appreciate it. So, mistake number one, you delay your coverage purchase. You got to stop that. If this is something that you're doing right now, I beg you to stop. Well-connected people don't delay their coverage purchase. The thing here is that the earlier you start with, when it comes to insurance, the earlier you start, the better, because you have some kind of operational history with the insurer. They know you, they have some kind of data on you, and they can lower the price for you. Now, when it comes to certain types of insurance, for instance, life insurance, the older you get, the higher premium rates go, right? So you want to get insurance ASAP. If you also have, for instance, you have some medical conditions, some disease, whatever, some insurance companies, if not all, want you to have a waiting period, right? So you have to wait a waiting period before getting the kind of insurance you want. That's why you want to get the insurance now, so that if 1 or 2 years from now you develop, God forbid, some kind of medical condition, you're already covered. You don't have to wait for 6 months to be covered. You can be covered ASAP. All right. Number two, you buy the wrong amount of coverage. This is another mistake that most people make. Now, you want to identify your needs, your financial needs. You need to know how much insurance you need. And to do that, you have to estimate your needs. I'm talking here about your health in your family, how many people are in the family, if you're married, if you have children. You have to factor all those elements into account. When it comes to car insurance, what kind of car do you need? What kind of coverage you need on the car? Life insurance, who are the beneficiaries for that life insurance policy? Your home, how much coverage you need for your home? So those are things you have to think about. Another thing you have to think about when it comes to amount of coverage, you have to add up your long-term outstanding debt. It's important because those outstanding debt will actually impact how much payments you're making every month, and that will basically have an impact on how much cash you have, how much disposable cash you have to be able to fund your insurance coverage. All right, so this is very important. Another type of expenses that you have to think about is tuition. If you have children, so you have child-related expenses, those things are important. Number three, you view the purchase as a one-time activity. If you view an insurance purchase as a one-time activity, you're making a mistake that well-connected people never make. Purchasing insurance is not a one-time deal. It's an ongoing process. You have to review your insurance every year or every 6 months. You want to constantly assess things. You want to shop around. You want to talk to your broker. You want to talk to your insurer to make sure you're getting the best coverage at the best price. You need to talk to your broker every few years, because in the meantime, your personal situation could have changed. Maybe you're making more money. You have a birth in the family, or somebody died, or you have major new purchases. You have a new house. You're married. So your personal situation is changing, and this is a dynamic situation. So the dynamism that you have in your family, in your personal life, should be reflected in your insurance coverage. All right. Mistake number 4, you only consider the price of the policy. Yeah, that's the thing. A lot of people just focus on the price tag, the premium they have to pay every month or every quarter for that matter. It is important, but you got to think about other stuff. For instance, you got to think about the policy's guaranteed benefits. So don't think about just the cost. Think about the rewards. Think about the returns. Think about what you're getting in return for that cost. You want to think about the insurance company's financial strength. We all have seen a lot of companies, a lot of insurance companies collapse over the years, even though lately it has been more scarce. But these things can happen. It's like a bank. You need to have a strong institution. I'm talking financially here. So you want to think about those things. You want to think about your benefits, but also the strength of the insurance company. So it's not just the price you are thinking about. This is pretty similar to when you buy a car, right? The car must have a higher price tag, but you're looking at different things to be able to evaluate whether this is a good purchase or not. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. If you like the content of the show so far, please consider subscribing to our channel. Turn on the notification bell. Please also comment, share, and like the content. We want people to stop making the insurance mistakes I'm talking about in this show. This will be fantastic. And I want to quickly acknowledge also some of our best viewers and listeners throughout the world. Particularly, I want to acknowledge right now Sarah Giles in Grand Rapids, Michigan, Amelia Booker in Lansing, Michigan, and Liberty Flame in Troy, Michigan. Mistake number 5. You buy a policy without shopping around to compare rates. This is a no-go. This is a big no-no. Nowadays, it's so easy. You have platforms, you have online platforms that make it very easy for individuals to compare prices. So you want to shop around. You want to talk to multiple insurance companies, multiple brokers to make sure you have the best quality, the best coverage, the best price. This is very important. And the good thing is insurance companies are willing to vie for your business. They're willing to fight for your business. So go ahead and avail yourself of all the tools that are out there, right? And again, this is important because if we take an example, for example, we take a life insurance policy. This is the kind of policy that goes on for 30 years, 40 years, 50 years. If you make a mistake and you are paying too much, let's say you're paying 100 extra every year, that's a lot of money. That's $5,000. Or if you're paying 500 over 40 years, that's very easily $20,000. That's a lot of money. So shop around, compare rates before making a choice. Mistake number 6, you select the wrong type of policy, which goes, and this comment harks back to what I said earlier about making sure you are able to identify your insurance needs, right? Once you are able to identify your needs, you should be able to buy coverage that matches your needs. And again, it depends on your personal situation, which is why you need to review your insurance coverage once a year. So let's say you have a new birth in the family, new car, new residence, all of those things, you need to adjust your coverage to match the good news that you have in your family. And it goes, this applies to all kinds of insurance. I'm talking about life insurance, AD&D, accidental death and dismemberment. I'm talking about annuities. Annuities is not really insurance, but I'm talking about all kinds of insurance products. Health insurance, car insurance, homeowners insurance, you name it. Mistake number 7, you cancel your current policy before you have a new one. This is a common mistake that well-connected people never make, right? So before you reach out, if push comes to shove and you want to change your policy because you're not happy with the service, you think it's too expensive, you're just moving out, and the company that your current insurer does not offer the coverage you need for whatever reason, make sure that you buy a new policy before you cancel your current one. The risk here is you don't want to have a coverage gap. Life happens, things happen in life. The last thing you want to do is for something to happen to you and you're not covered. Okay? Mistake number 8. You don't reveal your insurance policy to all family members. I'm talking here about the nuclear family, though. I'm not asking you to tell everybody in your extended family about the insurance policies you have. But close members of the family, particularly your spouse and your adult children, need to know what kind of insurance you need, what kind of insurance you have, especially when it comes to things like life insurance. Right? Because they are going to be the beneficiary. So you need to tell them what's going on. You need to tell them that, I have this, and this, and this, and this. You don't have to disclose the exact amount of the policy benefits or the full details, but make sure that everybody knows where the policy, who is the insurance company, that you have an account there. And the same applies for things like trust accounts. You want to make sure that somebody knows. And this could be your lawyer. It doesn't have to be the family member. If you don't trust, quote unquote, your family members, you can just leave this with the lawyer, right? So make sure that you let them know that everything is fine. Again, you want to let know your family members, or you can let know a lawyer or financial advisor or anyone that you appoint in your will, and or the executor of your estate. Okay? I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Sweetie Kiwi Show. We're still here having a wonderful time. And if you just joined us and you want to know the context of today's conversation, we're talking about insurance mistakes. All right? Because not having the proper coverage is a mistake millions of Americans make every year. And they only find out about the blunder when misfortune strikes and their policy doesn't apply to the particular risk event they're facing. So today I'm talking to you about 12 common insurance mistakes that well-connected people always avoid. Now, I've given you so far 8. I'm gonna talk now about 4 more, right? Before I do this, let me quickly give a shout out to Macy Cook in Amherst, New Hampshire, Yasmin Burns in Exeter, New Hampshire, and Eve Baker in Wolfboro, New Hampshire. Thank you so much for suggesting today's topic. We really appreciate it. Mistake number 9: you don't pay attention to rate increases, right? So if insurance companies they don't have to, but they do periodically raise their rates. That's how they make more money. Also want to account for the increase in cost of living. So there's something called COLA adjustment. So cost of living adjustment. So if you take an inflation rate of 3% or 2% every year, so they have to keep up with their expenses too. So if you don't pay attention to rate increases and you don't shop around, you will end up paying a lot of money on your insurance. So you need to constantly check your rate, constantly talk to, if your insurance company all of a sudden raises their rates, you want to contact your insurance broker or your account representative to discuss the matter and to get things to the place where they should be, financially speaking. For instance, let's say that the insurance company, you have a life insurance policy, and the insurance company raises the rate because they're saying that you are getting old and you're becoming of a risk, you're becoming a greater risk, right? You can counter that, for instance, by contacting your account representative and submitting an updated medical history, right? Which shows that, you're doing great, you have great biomarkers, you are fit, whatever. Anything you can submit to make them lower the rate, just go ahead and do it. And if they don't want to work with you, shop around for a new policy. You have to be flexible when it comes to choosing a new policy. You're not scotched. You're not basically wedded to a single company. No, shop around. Mistake number 10: you buy coverage via an affinity group. Now, this is very common. A lot of people buy coverage through professional associations and organizations that offer insurance coverage at a group rate, right? This is good because it's a win-win for the insurance company, but it's also it's a win-win for the affinity group. Everybody wins. Now the question is, for members, for individual members, is it better? Not so sure. Actually, years ago, the AARP came up with a study that shows that when it comes to life insurance, not everybody who gets coverage through an affinity group wins, not necessarily. So you want to find out your particular situation and make sure that whatever the insurer offers through the affinity group matches what your specific situation calls for, right? You want to customize. You want to customize your coverage here. So again, those are things that you need to pay attention to. Mistake 11: you think only key people or assets in the family should be insured, right? So the point here is, it's better to expand the coverage, the scope of coverage, as opposed to narrow it down, right? So for instance, if you want to buy a life insurance, you don't have to only cover you or the person who is the key breadwinner in the family. In other words, that person is not the only one who needs to be insured, right? Because if you think about insurance as a way to avoid sudden loss of income, sudden payments, like sudden loss of income, whether you are paying someone or whatever, if you think of it that way, then you would want to cover everybody. Why? Because if you're in a family, for instance, you cover yourself. What if something happens, your spouse dies first, or something happens to a child, to one of your children? I mean, the idea here is to cover everybody. And again, this sort of relates to everything from child care to home care to cars to home ownership to medical situation, that kind of stuff. Number 12 and last mistake: you purchase a policy without considering your lifestyle or medical history. This sort of harks back to what I said earlier, to make sure that your needs match your insurance coverage. So the thing is that you have to understand that insurance companies are in the business of managing risk, right? So basically, they could look at your lifestyle. So if you're a smoker, for instance, or if you have an improper diet, right? Let's say you have diabetes. Normally, the law says they shouldn't discriminate, but we all know how it goes in real life, right? Because they have a business, they have to manage their business. So the thing is, they have to manage to have a good mix of people who are healthy and folks who are not healthy. So if you present a risk in the sense of, we might have to spend a lot of money on this person because he or she's a smoker, then you want to go for an insurance company that fits your current lifestyle or medical history. Because not every insurance company is created equal. Some might look at a smoker favorably, quote unquote, favorably than others. It all depends on their business model. The same way some credit card companies prefer, again, quote unquote, prefer people who have a low credit score, right? It's all about the business model. So you want to purchase a policy that matches your lifestyle and medical history. Now, the good thing is that you can talk to your agent, your broker, about that, and he or she will work with you to find what really works for you. Let me give you another example. Let's say you want to get car insurance, and you have a heavy history of DUI, or you are required to get SR22 insurance. You want to put all those things on the table first while talking to the broker, so he or she can direct you to the best policy considering your lifestyle or medical or criminal history or legal history. All right, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're about to wrap up today's show, and I want to acknowledge again our millions of viewers and listeners in the United States and abroad. I want to also acknowledge now Peter Duncan in Durham, North Carolina, Matthew Walsh in Asheville, North Carolina, and Raphael Booker in Wilmington, North Carolina. And if you also want us to give you a shout out during a live taping of our show, consider subscribing to our channel and turn on the notification bell. Also, you can like and share this content. Comment below. Let us know your opinion, your expertise. If you have any contribution to make to the topic, we really appreciate it. So, today's recap. Here are the 12 common insurance mistakes that well-connected people always avoid. They don't delay their coverage purchase. They don't buy the wrong amount of coverage. They don't view the purchase as a one-time activity. They consider the price of the policy, among other factors, all right? They don't buy a policy without first shopping around to compare rates. They don't select the wrong type of policy. They don't cancel the current policy before having a new one. They reveal their insurance policy to all family members. They pay attention to rate increases. They don't buy coverage necessarily via an affinity group. They don't think only key people or assets in the family should be insured, and they don't purchase a policy without considering their own lifestyle or medical history. All right? So, today's call to action. It's pretty good. We covered a lot of stuff, but I want you to, this is the takeaway. Call to action. Reach out to an insurance broker, all right? Use online tools. Avail yourself of online tools. You want to compare types of insurance plans. Compare plan networks. Another thing that's very important is to review out-of-pocket costs. Those are very important. And lastly, compare benefits. All right? Thank you for listening, and see you next time. Stay marvelous.